Okay, so welcome everybody. Let's get the recorder rocking and rolling. Let's get started. Today is Thursday. It is June 13th, and it is 3 p.m. Eastern Time. So let's get started with our coaching. For anyone who is new, please put any of your questions or comments into the Q&A, and I will answer them. They are all private, so I will respond back with any questions so you can see that they've been queued up. And if it's something that you want to keep private, no worries, no one else is going to see it anyway. So let's get going here. Let's, of course, start with our amazing and lovely disclosures. Of course, I am not here as a licensed broker. This is purely for education. We're going to put out trade scenarios and setups. Please make sure that the setups make sense for your type of trading. And I'm not here to I'm not going to be soliciting any accounts, as I am not a registered agent or a licensed broker. Awesome. That being said, any questions, of course, you can hit me up at Ralph@Omegatrades.com. And, of course, anything I can do to help you out, I'll be more than happy to do whatever I can. And if you, of course, are on a trial that is running out, please make sure that you also get your membership taken care of. It's very simple, just through PayPal, and you have full control. So you sign up, you stay as long as you want. That's simple as that. And there's that. So PANL was the first stock that came up. So let's take a look at that. Let's bang that out of the way. And also we can turn off my Bloomberg terminal here. Don't need to hear that anymore. So PANL. This looks to be more of a downtrending stock here. And let's see, this question came in from Mike. So Mike, what were you thinking on this? What were you thinking of doing? Because the way I'm looking at this, I would want to trade this purely to the downside. If you were thinking that this would be a opportunity to start getting long, if anyone's new here, I am not a big fan of buying on the way down. Let's see. So the response is 26.85. Yeah, I see some support down there about the 26.85 and has bounced off of that. It also has a little resistance up here at 28.48. So if this is going to be something you want to sell some puts on as an option, I would be waiting. This is kind of like buying a falling knife, because I'll look at this chart, and if you think there's support, which I agree with you, there is support, let's take a look at this little guy and look at where you thought maybe support was on something of a larger company, of like, look at this 521. Support, support, support. So if you can go back to this time frame, kind of the same way on a smaller scale as you are with the stock you're looking at, and seeing something like that and saying, hey, well, you look, it's bounced off of its 510 support, which I would agree on, but it was still an extreme downtrend. And so, you think it's going to hit support, then it comes up and hits its head on that support, being new resistance, and then getting really heavily spanked. I'm not saying that this is going to happen to Panel, but, it's a much smaller company. But again, be very cautious of finding and picking the bottom. Les, good to see you. And his question is, how long do you recommend paper trading? Not too long. You want to make sure that you're going to paper trade to understand how to place the trade, so that way you put in the trade correctly. If you're going to go long and buy a call, then obviously you want to make sure that you're hitting the keys correctly on the computer, right? But after that, you want to start engaging in the market with real money, and you want to do it in a fashion that you are doing it with a small amount of capital, not a large. So, you've got any account size that you're going to think about. Just start risking a small amount. You got a $10,000 account, a $100,000 account, whatever your account size is. You got a $100,000 account, you can risk $500,000 on a trade. go out and buy a call, go out and buy a put. But don't spend too much time trying to perfect paper trading, because the only thing I notice you can buy in a paper account is a paper house, a paper boat, paper car. There's not really much you can do in a paper account. You really can start cutting your teeth in the real environment. And the reason I say that is you can always say, that was a fake account anyway. That one didn't count. Once you go live, there's no faking it, right? So, it makes it a lot easier for you to, paper accounts make it a lot easier for you to kind of hide from, from the reality of trading. So don't go in full bore, full steam, but definitely, take some time and work your way in, get your confidence, build your confidence, place some small trades before you start unloading, the full boat of how much you should be putting in the market. And that doesn't mean you load up, right? You don't just load up in the market, okay? So a couple of questions. Mike, you sent another question in via email, so I'm just going to read it out. Actually, what I'm going to do is I'm going to copy paste and throw it into the chat, because it's not doesn't have any of your account information in it. So I can definitely do that, so everyone can kind of read along and know. Send. So when looking to buy a debit spread versus selling a credit spread, the risk-reward ratios are inversely related. You mentioned that you look for 3-to-1 reward to risk ratio for, okay, maybe pay out $125 for a $5 wide spread, or 3-to-1 ratio, but selling that same spread would be a 1-to-3 reward to risk ratio. Lots of risk for a fixed initial reward. Okay, so I think there's a little bit of mixing my 3-to-1 reward to risk with spreads. 3-to-1 reward to risk means I am risking that dollar to make 3. In a spread, Mike, it's the other way around. I'm risking 3 to make 1. So, let me kind of put that in an Excel file for you a little bit, because it's very weird thinking, and I can understand why people would be like, what are you talking about? But here we go. This is a risk reward that I use with people, just to have an idea of, this is directional trading, directionally buying a call or buying a put. That's all this is, okay? So you can see that on your screen there. It should pop up here in just a second. There we go. So what I'm talking about is risk reward of $1.03, okay? Where you're risking $1 to make 3. That's on directional trading, buying a call, buying a put. This is the inverse when you're doing a vertical spread. On the vertical spread, you are looking to lose 3 to make 1. So let me just kind of do this. Lose 3 to make 1. Okay? But the thought is that you're right, 6 times, and you're wrong on 4. Okay? Which wouldn't work out very well, right? So what you have to do is you have to start looking at, even that isn't good. So when you're doing spread trading, the reason you are going to do a spread trade over a directional trade is you're looking for that sideways movement. You're looking for that ability to be wrong and still profit. So, when you're looking for a $5 wide strike and you're collecting $1.50, right? So in reality, what you're risking is you're risking $3.50 to make $1.50. Okay, so that's the scenario that I'm looking for. When you win, you make $1.50. When you lose, it's $3.50. Okay. Now you have to be right a lot more than you're wrong. Okay. But what this can't take into effect is that you're looking for something to stay above the strike you sold. So when you're asking me the question about your 3-to-1 reward to risk and credit spreads, debit spreads, this is what I'm looking for credit spreads, debit spreads. Okay, I am looking for 65% probability. Okay, and I'm looking to on a $5 wide strike. I'm looking. I just want to write it down so you can see it. I'm looking to risk 350 and reward 150. Okay, now the numbers don't really look great on paper. That's why I wanted to show you them. But the reason why is because, I can clean that up later, is because all you're asking this thing to do is to stay above the strike that you had sold. So you're asking for it to do nothing, right? If you're looking at Apple and saying, you know what, I want to go sell the $465 or the $470 call, just stay below 470 and you clear full profit. Look at how much range of motion you can give this and to be wrong. I mean, this thing could jump on you 20 points and you can still make money. Okay? So there's two different thoughts of process. When you're thinking high rate of return, credit spread, you're going to get a, when you're thinking of a high rate of return, like a directional call or a put, you're going to have a low probability. When you're thinking of a credit spread or a debit spread, which are high probability, you're going to get a low rate of return. You don't get both, okay? If you do, it's an anomaly in the trading, and that doesn't happen often. So, Mike, when you're looking at the differences, you're going to want to trade a calendar spread, a credit spread or a debit spread, either vertical, because you don't have to get any movement in your right. Just stay where you're at, okay? With a call or a put, you must get movement to make money. Okay? Does that help? And we can always do a follow-up question if you need to. Awesome. Good. Just got a helpful thanks. That's all I need to know. So let's go around and look at the markets a little bit. Okay? Obviously, we could see Apple is still downtrending. It's actually sideways trending, and it's working out very well for my my double diagonal I have going on. Which we talked about last week where we rolled it. I'm going to roll it again this week in front of you, so you can see, what's going on with that trade. Let me just take a look here. There we go. And so we've had a nice pullback in the market. This is a deep enough pullback to quantify it as a decent pullback. We got some of the, the movement that we wanted to see, and so. When you had such a large, gigantic uptrend from 137 to 167, that's a beautiful uptrend. We've got a pullback that's the most significant pullback we've had since this run, outside of the first one. Okay, this pretty much, when you go from 145 down to 139, this one from 167 down to 160. So it's about equal to what we had. Okay. And the market is starting to show signs of shrugging that off a bit. So what am I thinking? Well, I'm going to continue to stay cautiously bullish the whole way up, because at some point we will need to get a decent correction. Okay. So we haven't gotten major corrections, but we got something relatively. This was a decent correction right here, okay? But if you look at the rest of the markets, the Qs, and of course, if there's more information you need to get, that's exactly why we have private coaching. That's exactly why we have a class in teaching people how to trade options. Here's the Qs. A nice solid pullback, and now we're looking to again pop again, just like the spiders. The IWM. Oops, sorry about that. Didn't clear it out. Again, nice pull high, nice push higher, nice pullback. This one's the most poised of all three to give us the next leg up. If I draw a trend line here, I want to draw a trend line. can see we're right at the trend line break to the upside. Okay, we're right there. So when that is broken, that's where I would consider a bit of an uptrend. Okay, let's see. Let me bring in another question. Buffalo Wild Wings from my buddy Randy. His question was on Buffalo Wild Wings the other day. BWLD. Nice uptrending stock. So looked at Buffalo Wild Wings, possible bull call spread. So he was looking to buy an in-the-money spread. Okay. And so it was the, let's see, debit of 140, max profit 360. Okay, so here you go. Here you go. Let me throw this into the chat because this is kind of, what we were discussing. Okay. About Mike, this kind of dovetails into Mike's question. So looking to buy a spread, 140 debit, 360 is the max profit. Okay, so you're paying that spread up front. That's your max loss. So the stock is at 97.84 right now, and this would be buy the July 100 and sell the 105. So that means it's a bit aggressive. It's a bullish spread that is on the more aggressive side. I'm assuming, yeah, buy. Yep, okay. So basically, what he's looking at is for this stock to be above the strike he sold. So he's selling the 105. So let me show you that in the actual trade account. Okay, let's bring up the trade account here and trade Buffalo Wild Wings. So what he's looking for is the July, and he's going to sell and buy. Okay, so here's your 138. Okay, he was going to get 140. Now it's going for 138, so it's about the same. Okay, let's get at 140. Okay, so hit send and confirm. You can see there's 360 max profit, 140 of loss. Okay, but what this is an out of the money spread, which means the stock has to move for you to be right on this. Okay, so it's a lower probability trade. When you see the delta on this being 18, and when Randy wrote this in, it was at 17. So there is little chance that this is going to be in the money because it's got a 17 delta. Now it's got an 18 delta. Okay, my cursor's right on top of it. So this type of trade is a low probability trade. It's a higher rate of return than a normal spread, okay, that I would look at. So let's compare this. Let's go right-click, analyze, duplicate trade. Okay, then I'm going to come back here and I'm going to go in and analyze the same stock with a more with a higher probability trade that I would typically look at. So let's sell this. Oops, shoot, I didn't want to do that. Let me delete that. Sorry about that. Let's sell buy. Okay, and then let's go right-click, buy vertical. I'm going to compare two of these for you. I'm going to compare the 105, 100, and then I'm going to compare the actually 95, 90. Okay, do you see the difference in price here? You're going to get you're going to pay $1.35. Let's bring this up to 140. Okay, or we were going to pay $3.70. So the inverse of that is what you would make. Okay, so what Randy was looking at is this 140 debit. If I look at the analyzed chart, the risk profile, it's going to tell me that this stock, this trade, has a 32% probability of making you money. Okay. Versus a 68% probability of making you money. Do you see the difference here? Look at these numbers. There's a there's a 32% probability of losing on this trade right here. Okay, that's what that left side blue number means right here. That's what that means. Okay, there's a 32% probability the stock is going to be below your break even. Oh, let me see if I can zoom in a little bit, Paul. Good to see you, buddy. There was let me see if I can find, I have a zoom tool that I want to see if I can find for you, which of course now I can't find it. Let me see. I don't have the zoom tool. Right here on the left side of the page, you can see this where I'm circling the cursor, and let me actually annotate it for you here a little bit as a highlighter. Right there, that 32%, 31.9%. That's what I'm talking about. That would be the 32% probability of losing on this trade, which gives you a 68 probability chance of making money or breaking even. Okay, so that's what we're talking about. And so what Randy was bringing to the table was this trade on, hey, what if we sold the out of the money? Which, let me change this now. Let me get out of this tool. And there we go. And now we'll go back to look at Randy's trade. Randy's trade was a 67% probability of losing. So you can, it's a complete 180, right? So there's here we go. Can you see that? Does that make it a little bit better there? Might take a second to pop in there and see the zooming feature. You see how I zoomed in on that? So there's a 67.78% probability that this trade that Randy wanted to look at is going to lose. There's a 32.22% chance that he's going to break even. Okay, so on the other trade that he was looking I was looking to compare the two, there is a 32% chance of losing and a 67% chance of gaining or breaking even. So I've flipped the scenario. So Randy, it's not that I don't like the idea of the trade. I just don't like the idea of the strikes that you picked because of the probabilities. You're looking for a higher rate of return. I'm looking for a lower rate of return. But I know that consistently, all I'm asking the stock to do from this point is do nothing. If this stock goes nowhere, does not make one more penny, or in fact, it could lose a few bucks here. It could even lose a few dollars. And what I would end up with as a debit spread, if you don't know what it is, I would end up with an in-the-money call. Okay. Now look, if you need to learn how to trade it, then that's where we can teach you the trade. This is already analyzing the trade. But if you have an in-the-money call, what does that mean to you? That means that they are going to exercise that option on you. The broker is going to, the trader is going to exercise the option, okay, on the other side of your trade. If you sell this $95 call, you can bet your bottom dollar that they are going to exercise you when the stock is sitting right now at $97.80. Okay, there's no doubt that they're going to exercise. If they exercise, that means that you then will own the stock at 95, right? Okay. Well, they're going to want to take your shares at 95, but you don't own them. You have that other $90 call option, so you can theoretically exercise that. So think about this. They want to take it from you at 95. You don't own it, but you can buy it at 90. So if they take it from you at 95 and you can buy it at 90, there's the $5 difference. That's where you make $5. It costs you $3.70 to place the trade. Now, anyone who places spread trades knows that's never the approach you want to take. You never want to be exercised. You want to do it yourself because your broker is going to charge you an exercise fee. So it's going to eat into your profit. So those are the little pieces of why you need to learn how to trade it the right way. But Randy, you've got the right stock. I just think you're picking the wrong strike prices, because you must get Buffalo Wild Wings to continue in its uptrend for you to make money. Now, it is looking to be in a bull flag. It is looking to make another bullish run. So it definitely looks to want to be a bullish trade, okay? But from a probability standpoint, it hasn't broken out to your next upside move. From 95 to 99 is the move we're looking at here. And so we can see, if I put a channel on this sucker, okay, this is a fantastic spread trade. I mean, bull flag trade, okay? So I can piggyback off of what Randy's talking about here, and say, well, you know what, Randy, I agree with the stock you want to look at. I agree with what you're looking to do. Just maybe a different strike. So let me zoom out a little bit. Let me bring this over, zoom in, and so trend line. There we go. So we're looking for what is a net change of $6. Okay, now let's analyze this trade on a different approach. Randy brought this in as a vertical spread. I like the trade as a trend. I like the trend. I just don't like the strikes. We've already established that. So either you pick different strikes, which is totally doable, and then the other thing we can do is do the Fibonacci extensions. I love technical analysis, and I don't use a ton of it, but I use a fair amount that works. Okay? Let me do that, and let me go over here to the chart and set this up. I just gotta get a little more price access here. I got to expand this just so you can see a little bit more. There we go. Beautiful. So what we're going to ask for this sucker is a $6 move when it breaks out of 98. 98 plus 6 is 104. Okay, so I'm asking it to go above this. Oh, hold on. I got to move this down a little bit. No, that's pretty good. So I'm asking it to go above its Fibonacci extension. So I can use 102 as a fairly good number that I can say I'm looking for 4 points at least. The follow-up question: what makes a bull flag when the movement is heading downtrend? Okay, so what the bull flag is the question from Paul. The question, so what a bull flag is a technical pattern that we teach in our technical analysis program. It's a trend continuation pattern. And so it's just saying that there's a little bit of a not a downtrend, but it's just a little bit of a consolidation, okay, some profit taking. And what a flag means is that that profit taking is going to stop and that the bulls are going to come back in and start buying up again. What profit taking, if profit taking continues, then this thing is going to fall down and keep falling and keep falling and keep falling, kind of what Apple had going on. Okay, so on Apple, profit taking up here at the $700 mark, and then people weren't too thrilled with this thing, and it started to fall. People took profit. More people took profit. More people were taking profit than were buying the stock, which is why a stock drops. So on Buffalo Wild Wings, right now, more people are taking profit than buying, but today you can see the buying pressures happen again. So if we break out of this $98 range, we can definitely look for a $4 move on Buffalo Wild Wings over a short period of time. September is a little bit long in the tooth here, but if I was going to get that $4 move over the next 2 weeks or so, then let's see, that $7.90 would be worth $9 and change. Okay. The 11 would be worth 13. Let's see. We might be able to squeeze out a little bit of time here with the Julys. The 9 would be worth 12. All right, so you're going to make $3 on a $9 option. But what I don't like about that is the short amount of time that we have. If this is going to take about 2 weeks for it to build and do its thing. It still hasn't broken out yet, so it's not like we're buying right now because we've already confirmed the entry. We don't have a confirmed entry yet, right? So Buffalo Wild Wings, definitely put on your radar, and you can say that this would be a possible good directional call or a bull vertical spread type trade, credit or debit. We talked about the debit spread. The credit would be a little weak though. You don't get as much premium. You don't get as much bang for your buck on the vertical 95.90. Analyze this. See, look at this. If you look at these two, okay, you can collect $1.07. If you're going to say I'm bullish on Buffalo Wild Wings, I can either do the credit spread or the debit spread for bullish side trades, or I could do the directional call. Well, if you break down the two bullish spreads, the vertical credit spread is about there we go. Yep. So this one has got a 67% probability. Okay. This one has got a 68% probability. So can we just agree that they both have pretty darn close probabilities? Okay, so the difference is that when you're spending 365, all right, let's create a duplicate order. When it's going to cost you 365, you can make 135 right here, 135 risking 365. Okay, so you can make $135. Okay, with this trade, you can only make the credit, which is 107. So let me ask you guys, if all things were being equal, okay, the probabilities are the same, and you can either make $135 or you can make 107. Which one would you want to do? You want to make 135 or 107? Which one would you prefer? Does anyone want to make less money or more money? So when you compare the two trades, the 135, thank you, Rich. So the logic says, let's trade the debit spread over the credit spread because it's giving us the same probability but a better rate of return. So there's a classic lesson on when people ask me, why do you pick one over the other? For that exact reason. When it's all being equal, okay, when the probabilities are equal and the rate of return is higher on one side or the other, I will go with the one that's higher. I do prefer credit spreads, though. I like credits over the debits. But I can't deny the fact that this is a higher rate of return for the same amount of probability. Does that make sense? So what we've taken is we've taken Randy's trade. We've kind of thrown it back into the mix. We kind of rang it out, shown you a couple of different options, looked at it. It's still, I think everyone would agree from the chart that it's a bullish uptrend. Right? That's the first thing you got to look at is if anyone would disagree that this is a bullish uptrend. And if you do, then it's a different discussion we have to talk about. But when you dovetail the technical analysis with your options trading and you can determine your target and entries, and then you look at the trade scenarios that you can look at, that's how you determine what trade to place. It's not just, oh, it's bullish buy call. Well, look, it's bullish buy a call or trade two different type of spreads, and then which one makes the most sense or makes the most dollars. Okay? I think I kind of, you know what's great is I get one question and I get another question over the weekend or during the week, and it's amazing how they dovetail into each other because a question from Mike that came in via email about credit spreads and debit spreads, and then Randy sends me one about a debit spread, and then we end up turning into a whole lesson on the difference between the two and basically trading a call. And now if you're new and you still don't know how to trade those, well, then that's why you need to take the class. This is, if this went over your head, I apologize. It's geared to answer people's questions. So if you're just sitting back listening, great, take it all in, write down some notes, find out where your deficiencies are, and that's where you need to fill them. But for the trader who's asking the question, this makes perfect sense for them because now they're seeing their answers, right? And not only they're seeing the answer, but I'm giving them an alternative answer to their question. That's what's great about a forum like this. You guys come in with questions and we give you multiple answers. No problem, Randy. He just wrote thanks. See what you mean. But Buffalo Wild Wings is definitely setting up for another nice bullish, pop. That's for sure. So let me show you that Apple trade again. That just keeps. It's the gift that keeps on giving. Jeff, send me an email. It's Ralph at Omegatrades.com. Because if you want to get into what you need, I'd be more than happy to speak with you one-on-one or through email, and we can find out what you need. Okay, whether it's a class, whether it's private coaching, whether it's the weekly coaching, we can always help you out. Now, what I'm saying about Apple, the gift that keeps on giving, is because a few weeks ago I mentioned that we're in this sideways trading range. And so all it's done since then is continue to go sideways. So what I want to do is I want to bring up a trade that, there we go. See this Apple trade right here? It's a very small account that I trade with clients. It's a one contract trade. So I don't, for people who say they can't do, thank you, Jeff. This is a one contract trade for Apple. Now I'm going to actually place this trade right in front of you, okay? We've already rolled this a few times, so some of these P&L since the opens get a little skewed because there's already some rolling going on here. Oh, nice. American Express went positive. Beautiful. So let's go look at the chart on Apple. Okay, right now Apple is sideways. It's at 434. Okay, so what I've got here is I've got the 440 put and the 445 call. Okay, you can see that this call is worth 11 cents. So all we've been doing is rolling. I've lost 700, but I've made 600, okay? And I've made 40, and I've made 168. So when you take $700 and you basically can add 600, 700, 800, and I've made 800, that's why I've come up with, and the P&L is $100 for the last week, okay? I'm going to basically say that I think Apple's going to continue to go sideways. So we're going to go in here. We're going to roll this option. And I'm going to get about a $2.16 credit. Let's let it do its thing. Boom, order filled. All right, you can see order filled. So now I no longer have that that call. I actually have one for 8 days left. Now this put, these expire tomorrow, but I like to do this on Thursdays. And the reason I like to do this on Thursdays is less probability that I'm going to get assigned. I don't mind it if they assign me because I have the other option to protect myself. I just don't like that happening and having to deal with it. So I just do these things on Thursdays. Let me bring this down a little bit so I can get filled. Okay, let's see if I can get filled at 328. Boom, got filled again. Okay, so here's the account. You can see that I no longer have any quantity here. And now I've just rolled these with 8 days left. And I did this. Now check this out, folks. I just did this and got how much in credit? Can anyone see? You know what? I'll see if I can get that magnifier back up there. You tell me, how much money did I just dump into the account? 6 and 6 is 12, 14, 2, 3, 42. So $5.42. So I just put $500 into my account. And the little bell that rings for the trade to go off, that's like ringing the cash register. Okay? So all I've done is just reduce my cost basis on this trade. Now you can see the P&L got a little bit whacked out, right? Because now it says I'm down $600 and something because it's now basically looking at these two guys down here. Okay? But it's not taking into account that we've been rolling these things for a few weeks now. Okay, so I've basically been able to yank profit um, weekly and just continually drop a couple $100. This is $500, one contract, folks. That's one contract either side. Okay, and a question from Jeff. How often do you do weekly naked puts? I have been doing more directional, Jeff, because the market has been such a directional market. Um, but I would have no problem doing naked puts for a few days with the weeklies, because you get such a high premium loss, high time decay loss. And I'm going to also roll this in the money here. We've got these IWM. You can see I've got these weeklies. Okay. Again, we've been rolling these suckers. So it's at 98.40, and we're going to roll the 98s 5 times. Create a rolling order. Watch what happens again. You'll see me again sucking profit in. 1 second here. Oh, hold on. You know what we need to do with this? We need to actually roll out of this, because they've only got 8 days left. So let's just close this whole thing out and get out of this. I only have 8 days left. I'm going to lose a lot of time decay and look to set it up again. Let's get out of that. Now the spiders, we have 100 shares of the stock. All right, now check this out. We collected 80 cents. It's now worth 20. So we made 60 cents or $60 on 100 shares. This is your normal covered call. All right, so we're down from 65.99 or 166 to 164. So we're down almost $2. We're down $1.80, $1.85. But we've collected 60 cents here, and we've already been rolling this a few times. So let's create a rolling order and go and look to sell the next week options for 67 cents. Cha-ching. And then there you go. Okay, so we got out of the IWM because I had very little bit of time left. Q. Boom. How long do you go before you close out the long sides? Well, you just saw me to close the long sides out on IWM. That's a little longer than I would have preferred, Mike, because I only have 8 days left. Time decay significantly ramps up with 21 days left. And then it really starts to really heat up with about 14 days, and each day after that gets higher and higher and higher. So I really like to get rid of it, with 10 days left to expiration. I have 8, so I would have preferred a few more than 10. 10 is the bare minimum, but I was just seeing if I was going to get a little more time decay premium sap away on the on that. Okay, awesome. So what we can do is I can make that a little bit easier on you there, Fred. Hold on. There are different platforms. So let me log in now to my TradeMonster one, because you can do the same thing on your TradeMonster platform. Absolutely. Hold on 1 second. It's just logging me in. Launch trading. I'm just waiting for it to launch here. And just want to get the right account opened. Boom. Okay. So here you go. Here's the, maybe this might make you feel a little bit better, Fred. Here's your TradeMonster account. So we can do all these trades here as well. It's irrelevant. The one thing that they are missing here is that theoretical pricing, but they do have the Analyze tab. So, if you wanted to look at a specific trade, we can do it here as well. But let's look at it. Let's look at the couple things. Let's look at the chart on the IWM. IWM is looking to make another bullish pop here. Okay. Oops. Right click on that. And so if it does, continue. Oh, I don't want to put that in there. Darn it. Delete. If it does, let me go to cursor. There we go. So you can see that it does look a little more sideways here, right? So let's say we wanted to place that same type of trade options. So we're going to, this is how we're going to do it. We are going to go out to July, which has 21 days, or these Julys have 30. Let's see here. Where are the regulars? Nice, 37. That's what I want. Get rid of those. Get rid of those. Okay. So we're going to go in and we're going to go to with 37 days left, I'm going to go buy a strike in the money. Okay. And create a spread. And so this is the cool thing about this platform, by the way. Did you see what I just did? Fred, and for everyone else, I want to go out and buy. I want to buy the 98. So I'm going to go in here and click buy. All right, and then ask me, hey, by the way, you want to do this? How do you want to do this? You want to buy it? You want to sell it? You want to create a spread? Yeah, I want to create a spread. So what type of spread do you want? Well, it's right here for you, and I want to create a diagonal. So a diagonal is right here. Okay, it's going to load the options for me. Does it everything that I want. I'm just going to edit the legs myself because what I want to do is I want to buy the July 98 and then I want to sell the 100. And I want to do that for the weekly, which is the June 3rd, this one right here. Okay, so that gives me a debit spread of about $2. So all I want to do is I want to continue to analyze. So you can see I've got a bit of a bullish tint to it. Okay. So this is a trade where I'm expecting IWM to go sideways to even up a little bit. Okay. I've given myself up to the 100 before, that's my break. That's the one I'm selling. Okay. So I'm going to let that thing run up to the 100. I'm going to create this order and I want to do this 5 times. So we're going to do this in 2 different accounts. Okay. We are going to sell to open and buy to open. All right, we're buying longer time. Confirm. Paper account. Send. Now, if anyone is confused with that one because, you don't use that platform, not a problem. Let's bring this one over, and we're going to do the same darn thing. Okay, we're going to go out to the Julys. Okay, and we're going to do the 98, and we are going to sell the 100. And we want to do that for July. Okay. All right, and we're going to do that 5 times. Now, all we're going to want to do is just roll this, roll, week after week after week. So this cost us, look at that, American Express, nice. It was down this morning, folks. This is why you place your stop loss at the right place. We'll get into that in a second. 207 was what that debit was. Got this filled. Positions. So then there you go. Here's the position on IWM. Okay. Oh, you know what? It actually bought me 5. It bought me 10. So I got to sell 5 more of these suckers. Let me go over here. Trading. I'm surprised none of you guys picked that up on me. Options. And let's go to the IWM. I've got to sell another. Sell 5 of these suckers. Send and confirm. Send. Filled. Now if I go back to my account and look at the positions, we have a balanced position. No, we don't. Why did this thing? Oops. Oops. Let's quantity 5 calls. So my bad. I actually did have it right. I was just being a little quick on the trigger. I'm trying to get as much in as I can before we have to leave today. Look at that. Exactly. Don't be greedy. That's right. You're 100% right. Close. Create order. Confirm. Send. That's right. I was just trying to get everything locked in for everybody as we were, getting so much done at one time. But, positions, orders. Yep, there we go. Beautiful. Just sometimes I'm a little too quick when we're in the paper account, trying to get as much done as I can. So Mike asks the question. Good question, Mike. What action if the price moves against you? Stop loss, adjustment. Yes and yes. Stop loss and adjustment. Because I have a diagonal, Mike, I can roll down to a different strike price. And if it falls too much, then my stop loss would be finding a area of support. Let me zoom out here a little bit. Is finding that area of support, which would be like, first area of support would be, this 96 line. Let me bring in, not a trend line, I want a support line. Let's move these out of the way. I'll clean them up later. So you can see right there is an area of support. Okay, so I'd want support to be broken. And then you can see there's even another area of support down here. So if I get these areas of support, right, so no, I don't do trail stops. It would be a manual stop that I'd put in the computer as a hard stop. So if it fell down, I would want to look at it. I look at it and see if there's anything I can do, and if I can't do anything, I get out. If I can't generate any more credit. And for Mike's comment, yep, that's why I like diagonals better than calendars, because it gives me the ability to roll down. If it does not, then if I can't roll down, I just get out. So I look at the difference between doing a calendar and doing a diagonal, and I give myself a little bit of flexibility to be wrong on the diagonal. It's a little more forgiving than the calendar. If you are in a calendar, a straight calendar, and you can't roll down, then either you see if you can roll out another week a little sooner, or you just get out of the trade. Okay, if it's fallen too much, then you just get the heck out. That's all. I think Buffalo Wild Wings is going to be a pretty interesting one. That's one of the ones, that looks pretty nice. Thank you for bringing it up, Randy. Um, Another one is Macy's, which I haven't really traded a lot, but it has a nice bull flag break, and now we're getting that second bounce here. So if we clear, which we are at the highs of the day, so I'd be encouraged to take a long position on Macy's. Okay, so you saw me roll my Apple trade. You saw me get out of my IWM. You saw me roll my covered call. So yes, we do show some standard trades. Okay, your covered call. Buffalo Wild Wings we analyzed. I think that would be a good bullish trade. Macy's I think is another one that's looking to be pretty good on a bullish side. LinkedIn LNKD. Has started to really break down a bit here. Let me zoom in. And so, let me just bring back just a little bit. And so, put this in a bigger window so we can see it better. So what I like about LinkedIn is that it's breaking down. And I think it might be giving us another possibility to place the trade to the downside. So you can see that we had a nice series of higher highs and higher lows, and then it broke out of a head and shoulders pattern, okay, and then it broke that trend line, and it confirmed the breakdown. Now what we're getting is another channel in here, which might give us a bear flag to the downside. Okay, and if that happens, you can see that we might get a move from 187.50 down to 158.82. Okay, and so you can see that drop, and if tomorrow we get close to the open price of today, oops, darn it. It's being a little sloppy. I apologize. Let me activate the drawing. Okay, and let me come into here. So you can see that today was a nice little pop, okay? But that doesn't mean I'm bullish on it. So what I would see is I would like to see this break down. And I'd like to see this get down to today's open, sorry. And if we get today's open, all right, which was 166.43, it's at 172. You get down to that area, that's where I'd be looking to enter, and we're looking at getting a price move from about that 185 range down to the 160 range. You're talking about a $15 move down on LinkedIn. So we are getting a few stocks that actually will give us some bearish trades. What's Starbucks up to? Oops, helps if I spell it right. So you can see Starbucks is doing really well, okay? And so we're seeing a follow-through on that bull flag that we mentioned. Where did we mention that? Let me show you because I want people to know. Here we go. Starbucks looking to buy calls on the break of, what is that? 64.70. Let's click on that. All right, so we're looking on the break of 64.70. That was that resistance breakout, and this was back in the end of May. Okay, so you can see I posted this May 28th. So May 28th is right here. So I said if it got above that range, and there goes the bell, ding, 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 got above here, right there, get in. So if you got in above that, we're now getting a nice confirmation of a support bounce where you might, I'm not going to say this is a wildly profitable trade, it's probably a break even, but it's giving you a nice little entry again here to hop in. Okay, so we got Starbucks that's looking good on the upside, Macy's, Buffalo Wild Wings. We did a sideways trade on IWM. LinkedIn is looking to give us a break to the downside. Wait for the confirmation, please. Do not get in too early. All right. Right now would be too early. It did not confirm the downtrend. All right. So wait. Be patient. That's what trading is about. Okay. Take the precise entry at the right time. Okay. Are there any other questions? I'm going to send the link back in for you guys to do the PayPal. Remember, if you are on your trial, please make sure that you do get yourself signed up. Let's see if there's any other questions. We are at the 4 o'clock mark. No problem, Jeff. No problem. And of course, if anyone has any questions, you know how to get in touch with me. Right here. Just click on Ralph at Omegatrades.com. I'll be more than happy to help you out in any way that I can. Okay. Yes, this will be. This definitely will be recorded. Awesome, David. That's awesome. I know you were working on Thursdays to be the day for you. Oh, darn it, Mike, that was it. You asked me about RKUS, so let's look at that. So, David, that's great news. I'm looking forward to having you next week. I know you're working on trying to get that Thursday day to work out for you. So let me finish, though, because I did want to use RKUS. You did ask me, and I did not show it. So, yep, that does look pretty ugly, huh? So it broke support. So here's another stock where, hey, you think it's going to hold support. Well, it's in a downtrend, and, I don't like things at support in downtrends. So it broke out to the downside. It didn't give me a very clear or clean, I'm sorry, it would have given me a nice entry right here. I just didn't see it. I wasn't in front of it. I wasn't paying attention. I don't trade a lot of $12 and $15 stocks. But this is a downtrending stock. It doesn't look like it has it dropped out of its floor. Look, folks, it came all the way back to December of 2012, and it broke out of that, right? And it stalled there for a little bit, and then it broke out and then used it as resistance, and it's rolled over from here. So, look out below. Here's the thing. People will trade these and say, that's the bottom, I'm getting in. And you might be right. I just know from a probability standpoint that more often than not, that's going to be the wrong trade. So if you think this is support here, which it broke, and it's not, because now new support is the low of today, if you don't think today's low is going to break, which would be the next area of support, and you buy here, you're taking, by all accounts, a low probability trade. So I like to be, what I do is I set up my 3-to-1 reward to risk ratios with higher probability scenarios. Instead of buying here on the dip on RKUS, I would rather say, you know what? I would rather go into Buffalo Wild Wings, Buffalo, how is it? BWLD. And I'd rather say, uptrending stock, probability it's going to continue its uptrend versus RKUS, downtrending, broke support, probability it's going to stay sideways to downtrending. If I'm going to go long, I'd rather put my money here. So RKUs, yeah, Michael, just to kind of, I'm not beating up on Michael. He mentioned that this is looking ugly, and I'm agreeing with him. You're absolutely right. So, yeah, it's still looking ugly. I still would stay away from it. I really wouldn't even trade it to the downside, honestly, because it's already broken. It's not giving me a good entry today. And if you want to wait, I would rather see you get into LinkedIn when it confirms. You're looking for a bigger move. LinkedIn is looking to make a bigger move than this stock is worth, RKUS. RKUS can only go down to the $10. We're looking for over $10 out of LinkedIn. And I don't think it's going to go to zero. All right, folks. I do really appreciate your time today. Again, if you are on your trial, let's get you rocking and rolling. David, I'm looking forward to having you next week. You've got the link. Of course, if there's anything I can do, send me an email. And I will be happy to do whatever I can to help you out. Until next week, folks, trade safe. Send me emails. And I will be happy to either answer them back email-wise or right here in the Q&A. I'll talk to you soon. Take care.